Guys, thank you for making the time to dial in to this virtual conference. My name's Ryan Gale. I'm from PAC Partners. The idea for the virtual conference today was just to go through the future of Cannabis 3.0 on the back of some tailwinds, certainly globally. I'd just like to give a shout out to Matt Wright from NWR Communications for orchestrating the technical lifting and then also some of the marketing. PAC Partners, we're one of the first brokers in Australia to get on the scene of medicinal cannabis. We're assisting the cannabis industry to be a genuine industry. We were also one of the first markets to IPO Cann Group back in May 2017, and since then we've led multiple corporate deals and raised in excess of $300 million for emerging cannabis companies across cultivation, patient access, data technology, and nutraceuticals. So as you know, 2020 has been certainly a different year, but despite the ongoing COVID pandemic and legal cannabis, has been able to weather the storm to a degree. And just to cap off a long year, there's been some really strong tailwinds. And I'd just like to say there's probably been about three main catalysts that I see in the market at the moment that has been quite fundamental. Firstly, the Australian market has continued to grow strongly throughout 2020. It's poised to continue strong growth in 2021. There's been about 50 or so thousand SASB applications throughout the year. And we're poised to probably have about 75,000 new applications next year. Continuing that, the Australian landscape will continue to evolve. We think the regulatory developments domestically and globally, especially the TGA, looking to reschedule CBD to a Schedule 4, which allows the products directly to be available in pharmacies, is a great catalyst leading into next year. And lastly, globally, several regulatory catalysts which will shape up 2021, that being the UN's recent rescheduling of cannabis, the US vote on cannabis decriminalisation, and also the recent ruling by the Court of Justice for the European Union to announce that CBD will no longer be a narcotic. So in saying that, I'd just like to introduce four guest speakers for today. The first is Kingsley Wilson from Chrystal Capital. He's a partner and co-founder. Chrystal Capital are a UK-based experienced corporate finance and investment house. They've got an established global network of family offices, and they've deployed about $210 million into cannabis, over the last few years, similar to PAC Partners. They've got a diversification strategy. They've also got a fund up and coming called Vitalis Capital. So I'll shortly hand you over to Kingsley, and then I'll lead you into Dr. Richard Hopkins, who is the Managing Director and CEO of Zelira Therapeutics, Shane Duncan, COO of Cann Group, and also Joel Sherlock, who is the founder of and chairman of Vitalis Extraction, who are a leader in the manufacturing of industrial scale extraction systems in Canada. So thank you for the conference, and hopefully you can get a bit out of it. Kingsley, over to you.
Great, thanks very much for the introduction, Ryan, and good afternoon or good evening, everyone who's listening. My name is Kingsley Wilson. I'm the investment partner here at Chrystal Capital, which acts as the investment advisor to Vitalis Capital, which is a Guernsey-regulated $200 million healthcare cannabis fund that we're setting up to launch and invest into the global cannabis space focused on the healthcare side. So what I want to do is just run you through some sort of key headline slides that we've put together, which will give you a bit of an overview in terms of who we are, why we like this market, and why, importantly, we think that cannabis now is a very investable alternative asset class for family offices, institutions, and high net worth to start considering. So I'm going to run you through a few slides, but before I do that, just a very quick introduction to Chrystal Capital. As Ryan said, we act and have worked with, over the last decade, a global network of family offices, and we help those families deploy capital into all sorts of deals and different opportunities, mostly on the private side. I think over the last decade, we sort of helped around 400 family offices deploy about $1.6 billion into a wide variety of different types of businesses across all sectors, all stages, all sizes. And this is often the case. It was actually the family offices that led us to start looking at the cannabis space. A few years ago, a number of them started to approach us and ask us what we thought about the space and to look at certain deals. And to be fair, we hadn't really looked at the space, but we decided that we really should get up the curve and make sure we understood what was happening in cannabis, which we did. And I guess over the last 4 years, as Ryan said, you know, we've now helped our families deploy over $210 million into direct cannabis opportunities, both public and private, North, South American and European deals. And I guess, you know, those deals have done particularly well, all things considered, what happened in the market. And one of our family officers came to us at the end of last year and said, look, guys, we really like the sector and the space. We like the kind of growth trajectory. We think there's money to be made. But for us as investors, you know, it's pretty time consuming trying to make sure that we understand all the moving parts of this market. And of course, deal by deal is risky. So what we'd like to do is work with you to set up a fund, which is going to be a blue chip institutional quality fund. So if you go and get a fund properly regulated, you build a dedicated team within Verdite to look at the cannabis sector and understand all the dynamics of it. You put together a strong board, an investment committee, and a very kind of concise but clear diversified strategy. We'll cornerstone you with $100 million. So that sounded like a pretty good idea to us. And over the last sort of 9 months, that's what we've put together. So we've now we've launched Verdite Capital. We're targeting at $100 million first close. And obviously into that, we have $75 million cornerstone by that one family office. And then a second close for the second $100 million, they're cornering $25 million into that. So in aggregate, there'll be $100 million of this $200 million fund. So if it's okay, I'm just going to share a presentation with you. And I'm going to bomb through this in pretty quick order. The first thing we do when we talk to investors is we try and sort of dispel some market misconceptions, and we try and focus them of what's going on in the market and where we're investing. So the three common questions we get is, what's your fund going to invest into? Am I safe to invest into the cannabis sector? And what is going on in the cannabis sector? We've seen it go up, we've seen it go back down. Is there a future or was it a fad? So as you can see, this is a healthcare-focused fund. So we are not investing in adult use. We're focused on the wellness, and think of CBD products, obviously medicinal cannabis, and the pharmaceutical market. The second kind of question is about legality. You know, actually, this is one of the most highly regulated sectors in the world, given the nature of the product. Think about investing into sort of the banking sector and banking stocks rather than the Bitcoin end of the market. And then on top of that, we've managed to get Verdite regulated out of Guernsey, the family office allocating us $100 million, said don't go to some light touch regulatory jurisdiction like Bermuda or the Cayman Islands. We want you to go to the bluest chip, highest quality jurisdiction, which is Guernsey. So we spent 9 months with the Guernsey Regulatory Authority. And then the final kind of layer of safety for investors is that, you know, every investment we make across the 10 to 15 picks we're looking to do has to be compliant with UK law as well as the laws of the country we're investing into. And then the final piece is really a kind of question about where's this sector going? You know, everyone who's looked at the sector will have seen it had a tremendous rise and a big crash. Now the question is, what's going to happen from here? And I think actually what we've seen in cannabis is kind of what we saw in the .com boom and bust. A lot of excitement, a lot of euphoria, a lot of hot money flowed in, and unfortunately a lot of subpar management teams with spurious business models also got backed. And over the last 2 to 3 years, as reality has set in, we've seen a lot of those businesses disappoint and fail. And that's dragged back valuations and expectations. But again, much like the .com boom and bust, at the bottom of that, we expect to see the really high quality, well-run, strong businesses now start to power forward as we enter this cannabis. Well, we're calling it 2.0. I think the conference is 3.0. So I'm 1.0 behind the curve at the moment. But we see huge potential now coming in this sector. And of course, we have rear view looking capability to work out which of the companies to back. So why should investors be looking now to allocate capital into the cannabis sector? 2 macro reasons. One is this is an absolutely huge sector. It's a $350 billion a year market, but because it's been illegal for the best part of 80 years, most of those consumer dollars flow to the black market and illegal channels. Now, for the first time, state by state and country by country, we're going to see this massive ending of prohibition and a rollout of legal frameworks. Companies, for the first time, can operate under legal frameworks, and therefore investors, for the first time, can really back those companies to capture a growing share of that switch from that $350 billion of illegal to the legal market. So imagine being able to invest in some of those alcohol businesses in 1933 at the ending of alcohol prohibition. Those businesses went on to become huge, big winners and created massive value for shareholders. We see the same thing happening in cannabis. The second macro point is, as with everything in the investment world, timing is critical. And so right now we see really depressed valuations for strong, fast-growing, well-run businesses. And critically, we see limited competition in the growth side of the market. And that's really where Verdite with $200 million is going to sit. So we're not investing in very early, very small stage deals. We're not really looking at the public market. What we're trying to do is provide that $5, $10, $15, $20 million growth capital to these fast-growing private businesses. And that's where there's a huge gap in the market. Why us? Well, we've been doing this in cannabis years for a very long time. We've looked at hundreds and hundreds of deals. We have a very clear view in our mind about where we think the value gets created in cannabis. Not all things with cannabis in the name will go up. There will be certain subsectors, certain geographies, which we think will deliver supernormal returns. And that's where our strategy is focused. Over the last few years, we've deployed over $210 million on behalf of a large number of our investors into the sector. And we've generated a very strong track record, which I'll come on to talk about. In terms of the team behind Verdite, we have a 5-person team that we've put together. And what we're doing is we're blending our kind of long cannabis experience with private equity experience. We think that's something that's been missing in the investment market. So again, how do you thoroughly, vet deals? How do you find these deals? How do you due diligence them? How do you structure term sheets to protect on the downside? How do you sit on boards? How do you create value? And how do you help those businesses exit? So we think we blend cannabis experience with the private equity and capital markets experience. Then on top of that, we've built an advisory board, which Joel actually on this call is a member of, who are some of the CEOs and captains of industry in cannabis. Bruce Linton, as many of you will know, is the founder and CEO of Canopy Growth. There's probably not a company or a deal in the market he doesn't see, and his reach into being able to help us due diligence management teams is huge. And behind that, we have 9 other people, again, who have all spent their careers in cannabis. So we've got a lot of experience around the cannabis side. And then on top of that, the investment committee, again, very heavily steeped in private equity. Tim Farrow's been around, the UK's largest private equity firm. So again, it's the combination of the size of the market, the scale of the growth of the market, where valuations are, the team we've put together, the structure we've put together, the track record, and the people that surround us, which is why this one family office is cornering us for $75 million. I just want to quickly run through some of the market dynamics. Those of you who have looked at the sector will be familiar, but of course, we believe this is a huge market that's on an incredible growth rate. Just to think, a few years ago, the legal side was nothing. Last year, it's 15 billion. This year, it's targeted to be 20 to 25 billion on the legal side. To give you a scale of context, that makes it larger than the global music industry. And yet from here, we see still 20 times top line growth over the next decade, which in a COVID era where a lot of other sectors are struggling to grow, that's going to be, a really interesting space for investors to be looking to deploy their capital. What's driving that growth? Well, a whole number of tailwinds, from global regulation to consumer acceptance of the medical benefits, choice and availability in terms of number of products, delivery mechanisms, purchase points of those products. And we think science is going to be a big part. Right now, something like 320 clinical trials studying cannabinoids are underway. So we expect more of these big pharma companies like GW Pharma to get created. And the one thing that's really missing to help solidify and drive this market is growth capital. And again, that's where Verdite intends to sit. This chart here will just give you a visualization of the size of the market. This is not some sort of small niche market that a lot of our investors think this is. This is a major global consumer sector, bigger than TV and video, bigger than the global wine industry. If you look at the chart below, an interesting one, if you look at the top 3 companies that operate in each one of these other major global consumer sectors, they add up in aggregate, just the top 3, to hundreds of billions of dollars of market cap. Yet in cannabis, the top 3 are about $18 billion. So clearly a massive valuation arbitrage, which we expect to close over the next few years, and that is our focus. Again, this just gives a visualization of the wave of legalization as it unfolds, as prohibition ends, led by North America, now medically legal in 20 countries around Europe and Southern Africa, and of course, it's really started to sort of pick up pace as well in Asia. So again, for investors starting to look at this space, this really is a very, very interesting time for people to start considering where they make money in the sector. Why is it ready for investable capital now from families and institutions? Well, we think we're firmly in the growth phase of this cannabis sector. Typically in every other sector, it's the growth phase where the most amount of shareholder value gets created. Second, we also want to see other blue chip sectors and companies starting to endorse and recognize the growth profile of any fast growing sector we want to invest into, whether it's pharma, tobacco, alcohol, or FMCG. We see these big blue chip companies now looking and investing in the sector. The big ones were Constellation putting $5 billion into Canopy, Altria put $2 billion into Kronos. And again, we see more and more evidence of other sectors coming into cannabis. Again, a great endorsement for why we should also be investing as financial investors into the space. You also want to see a sector starting to receive capital, and you want to see M&A, a fragmented sector, consolidating. We see both those indicators. The real opportunity, however, we see in the market is this source of growth capital funding. So again, the market's growing incredibly quickly and to a large scale, but it's really been driven by small investment, friends and family, early stage VCs, small entrepreneurial family offices, and then some of them have made it to the public markets for hedge fund capital. But in between all of that, there is a huge raft of really strong, fast-growing private companies that are struggling to access growth capital. When you take a look on the right-hand side at technology ownership, typically institutions will own 50% of technology or other more mature sectors. In cannabis, institutional ownership is less than 5%. Clearly, we think that changes. That's the opportunity for us as a $200 million fund. Why? What benefits that bring? Well, we think we're going to see just about every deal in the market, and we're obviously going to be able to negotiate extremely attractive entry valuations. What's the upside? What does this market look like in 10 years? Well, let's just look at other mature global sectors like tobacco, alcohol, and pharma. The market caps of the companies in those sectors typically trade at 4 to 6 times the global annual sales of those sectors. Last year, cannabis was legally a $15 billion market. The combined market caps of all listed cannabis companies currently is about $50 billion, so trading at about 3.5 times sales. Let's fast forward 10 years. It's now globally legal. This is a $350 billion a year legal market. We put that on 3 times sales, then the market caps of cannabis companies in aggregate should add up to about $1 trillion. So really, we see about $950 billion of investor capital getting created over the next 10 years. That's the opportunity. Just finishing off on the market side, having said all of that, deal by deal does carry elements of risk. We've seen lots of companies, well-known companies in the North America run into issues. We've seen public market value destroyed. And again, that is why the family office cornerstoning us for the money said, look, guys, we want to play the sector, but we want to do it for a diversified risk-adjusted strategy. And that was the genesis of Verdite. In terms of us, just to recap, we've been in the market a number of years. We've deployed over $200 million. We've invested $11 million of our own capital into 6 deals. We've exited 2 of those deals, returning $20 million, and we're still in 4 other private deals, which on outside capital are up 5 times our money. So again, when you're looking to invest in a fund, you need to find a fund manager with a strong track record, which we have. Why else would you come to a fund via a fund? We think you're going to see the waterfront coverage of all the deals in the market. And also through the fund, as you can see on the right, we've got a very diversified strategy across production, cultivation, genetics, brands, formulation, delivery devices, distribution channels, retail, ancillary, pharmaceutical. We see multi-billion-dollar businesses getting created in each one of those subsectors. So we want to make sure that we're invested across that value curve. We want to make sure that, again, our capital is flowing around the world, to North America, Europe, rest of the world. And then obviously, like all good fund managers, once we've deployed that capital, our job is to help create the value in the businesses and then to help exit those businesses to return capital. Last slide really is one of the interesting things we see in the cannabis sector is how you can exit your investment opportunities. So again, public markets have been open in North America. The London Stock Exchange just came out with guidance 4 weeks ago stating that they're going to allow wellness, medicinal, and pharmaceutical cannabis companies to list. We're starting to see cannabis companies list, across Europe, obviously in Australia, and we see that trend continuing. So more and more exchanges are going to open up around the world. Financial engineering will come apart. We think banks will start to lend into the sector so we could put leverage into our portfolio companies. We think big private equity firms over the next few years are going to come as that federal legalization issue resolves. And then, of course, whether it's the big US or Canadian cannabis companies, pharma, tobacco, alcohol, or FMCG, more and more of those big companies are going to look to vertically integrate and to expand geographically. So again, if we have a strong portfolio of 10 to 15 investments, we see great opportunity to exit those companies at a high value. So really that's it. We think this is a huge sector that's going to grow real quick. We see great values in the market at the moment. We've got a team that's dedicated to looking at the sector. We've got an experienced team that's already deployed 200 million. We've got a great board around us. We think we'll see most of the deals in the market. We've got a very clear diversified strategy. Investors in our fund get co-investment rights. And our plan, of course, is to create the value within the portfolio companies and exit them. So that's the quick summary on the market and Verdi.
Thank you, Kingsley. Yeah, certainly agree. It's an exciting time in the industry, especially on the back of the legislation changes, and the key drivers will hopefully be some of the top tier pharma and FMCG companies leading into 2021. So thank you very much for your time. Moving on to the next speaker, Dr. Richard Hopkins, Managing Director and CEO of Zelira Therapeutics, an ASX-listed biopharmaceutical company engaging in the development of cannabinoid-based formulations in the treatments of various medical conditions, including insomnia, opioid reduction, and pain to a degree. Richard's an experienced biopharmaceutical executive himself and has had previous experience in multiple pharma licensing deals. So Richard, welcome. Thanks for coming onto the conference. Just a couple of topics I'd like to talk about. Firstly, globally, we're starting to see a legal framework where the United Nations has removed cannabis as a Schedule 4 drug. Can you comment on the related decisions by the House of Reps and the support of the MORE Act and also the landmark decision from the EU Court of Justice regarding the removal of CBD as a narcotic?
Sure, Cann. Thanks, Ryan, and thanks for the opportunity to participate in forums like this. I think they're really fantastic. So the question you just asked actually is a beautiful segue from the backdrop and the background that Kingsley has just given us in terms of where the opportunities lie for cannabis. And we've just seen three really important legal outcomes over the past few weeks, which have reinforced everything that Kingsley has been talking about, that the winds of change are apparent. And then I think we can expect to see these continue to develop and probably lift a lot of the rather prohibitive regulatory frameworks we have in many different jurisdictions around the world, and investors should be poised to capture these if they're observant in terms of what's going on. So the three decisions you referred to are really quite significant, and I think are having us for things to come. The United Nations, first and foremost, the Commission for Narcotic Drugs has recommended a reclassification of cannabis away from Schedule 4. Now, by itself, that's a recommendation, but certainly a number of countries like the US and Australia will take guidance from that particular commission because it harks back to the single convention. And so one might expect over the coming years that we'll see a loosening up of this very trite scheduling of cannabis as a prohibited substance alongside, cocaine and heroin and so on, onto more reasonable levels. And I think what I'd be looking for now is for smaller countries to start picking up that as a cue and changing their legislation. So I think that was a really significant outcome to that particular ruling. As a follow-on from that, not 2 days after the United Nations came through that recommendation, we saw in what was largely a symbolic move, but the US House of Reps voted to approve the MORE Act, which is seeking to decriminalise cannabis at one level, at least at the federal level. And again, this is something that's been discussed for a number of years in the US. That's unlikely to get through the Senate at this point in time, but I expect that Democrats and to some extent some Republicans will keep banging on the door. And so what we're factoring in as a company that sometime over the next 12 to 18 months, cannabis will be removed from Schedule 1, and the FDA will be given oversight of the medicinal cannabis sector. And that's going to change the landscape in terms of the companies that will thrive and those that will struggle to exist if you haven't prepared for the way that the FDA will view the world in terms of being able to market cannabis products, medicinal cannabis products. And the other one that's come through recently was the ruling from the EU Court of Justice. Very interesting. And that sought to clarify some of the legal status and grey area that sits around CBD, which has obviously been moving fast in that sector. And they've confirmed that they don't see CBD as a narcotic. And so I think has opened up huge opportunities for CBD to be marketed and trafficked across all the jurisdictions in Europe. Again, if you're positioned for that, recognising there are additional complications around new food classifications and so on, you should be able to execute proficiently. You've got a smart business strategy with some clarity now in terms of all those jurisdictions. So I think investment should follow where those companies are hopefully sitting.
And do you think, take into consideration that potentially the Senate does get through, hypothetically, do you think that lowers barriers to entry potentially, increase competition? People who maybe have a head start on this, but can people catch up quite quickly?
I think there are going to be two areas you're going to see will change quite dramatically. One is I think, as Kingsley identified, see a lot of consolidation in the US. Right now, they've got this incredible challenge where, because of the federal restriction, they've effectively had to recapitulate that infrastructure to, extract, to grow, and then to distribute cannabis on a state-by-state basis, which is hugely inefficient. And that's partly the reason we've seen a retraction in the industry. The idea that you can suddenly ship product across state lines will see, I think, forcibly so, a lot of consolidation in terms of companies wanting to achieve scale and then distribute those products more efficiently across the US. So I think that's inevitable. But I think the elephant in the room for me is really what the FDA is going to do. And I think their expectation, we've already seen with CBD, that they're going to be demanding that companies demonstrate some support for their clinical claims, means that you are going to see a lot of companies go by the wayside in the medicinal cannabis sector unless you're prepared for it. There aren't many companies that have been gearing up, I think, to work with clinically validated full spectrum products under the guise of the FDA within the United States, largely because of that federal prohibition. So we're excited that largely ex-US companies, we think, will be well positioned if they've got exposure to that market and the FDA gets oversight.
Sure. Moving over maybe to the European landscape a little bit, leading markets in Germany and the UK, with these guys following, how will regulation impact the sector? Is there? It's more predominantly flower-based, and I know that's talking probably a bit more recreational in a medicinal sense, I guess. But with CBD opening up, is that going to be a little bit more saturated than we think? And how does that look in the future?
Yeah, great question. I think the CBD markets are obviously very competitive in the UK and to some extent in Germany. But if you look at full spectrum medicinal cannabis products, Germany, you're right, is predominantly flower. It's a bit of a quirk in the market, but I think that's been sustainable by its reimbursement system, which has really favoured the use of flower for whatever reason. And that works its way all the way across the value chain, where it certainly incentivises chemists and compounders to maintain that status quo. We're only just now seeing, I think, the emergence of oils and extracts, which really are more common in other jurisdictions because they look and they take on a form that's more medical-like, and I think it's what patients prefer. Typically your grandmother's not going to smoke a bong, but they will take an oil. The problem I think you face in Germany is it is so extensively regulated that no one's quite figured out whether the reimbursement system actually works efficiently just yet for extracts. It will, but I think you're at the forefront of that now, where you see companies like LGP and Althea moving alongside Tilray. But that's very much a nascent market. The UK is really interesting. I think it resembles what's happening in Oz. It's 2 or 3 years behind, arguably, but they seem to have been leveraging a lot of our legal framework and regulatory framework. So one could expect the UK will look a lot like Australia in years to come. And hopefully that becomes a model that is rolled out across Europe. I think it'll be a much easier market for us to understand and invest in if there's a more consistent framework in Europe. But it is inconsistent at the moment.
And finally, medically, are there any particular applications? I understand Zelira are right across, opioid reduction, insomnia, and autism. Are you seeing any other applications with considerable strength? And in your opinion, besides Zelira, who may be the next GW Farm, the next Epidiolex?
I'd like to think it's us, but I can't say that. Look, I think GW have been amazing in terms of what they've done. And I think over the last 10 years, they've really shone a light for the rest of us to follow through. But I don't know. I think the companies to me that are really interesting are the ones picking genuine niche indications, which is a more traditional pharmaceutical type approach, and then developing a portfolio of assets that are really specializing in those spaces. That then allows them to fast track the path to ultimately getting registered as products. That discipline is really important. So I think, to me, the more companies that resemble a classic sort of mini pharma in terms of their disciplines and approaches, they're the ones I'd be looking at in terms of, I think, seeing them as investment opportunities. I don't think there's any one area that stands out. Pain is obviously the dominant feature for medicinal cannabis, but that's traditionally a pretty difficult area to operate in from a pharmaceutical perspective. It's an all-comers problem in terms of There's not one standard chronic pain sufferer, and it's very difficult to develop your medication for any one particular thing. But I think cannabis is very strong in that area. I'd be amazed if some companies don't emerge very clearly in that space, not necessarily targeting opioids, probably other medications is the market they may go for that exist in the chronic pain space. But I think this idea of specialization and taking on a more pharma-like profile, as GW have done, they're the companies I'm really interested in seeing as genuine competitors to what we're doing.
And playing the devil's advocate here, is there a chance that, are the TGA, the FDA, are they looking really hard at making sure that this new frontier of medical cannabis for pain or whatever applications may be, that we don't see an episode similar to the opioid crisis in 20 years, we might see some psychosis coming through or something very similar?
Yeah, the psychosis one is tough, right? Because often that's a long-term usage problem. And even clinical trials don't always meet that can't address that endpoint effectively. But I think when science is given full rein to really invest in this space, you're going to start to see those sorts of questions answered as we take on, again, a more pharmaceutical type outlook. I'd be interested for the panel's view, but I see a really interesting tension emerging where many regulators around the world have given us early access to cannabis as unregistered prescription medicines. But I think we've started to almost grow this sector to a point where it's usurping a mechanism that otherwise wasn't really intended to do this. So whether there's going to be some pushback from the regulators as we start to grow the sector and they demand more and more clinical data to exist in this space, and then also having to demonstrate a commitment to a path to registration in order to survive. I just wonder where that's going, because I think we're hearing noises from regulators all over the place. They're growing uncomfortable with the speed at which cannabis is growing without the clinical validation they typically look for. I think that's just a little signal that we're looking out for as a company.
Great. Richard, thank you very much for your time.
Thanks, Ryan.
Moving on, Shane Duncan, COO of Cann Group Limited. Shane currently oversees the commercial, cultivation, manufacturing and R&D programs for Cann Group. He has extensive global experience in strategy development. He's also led the North American commercial operations for Australian startup company Rhinomed. Shane, welcome.
G'day, Ryan, and hi everyone. Thanks for having me on the panel this evening, or this morning, and late evening for some of the participants.
Great, thank you. I'll start off, Shane. One question I definitely get every day in the broking game is flower as a commodity, and you probably knew this question was coming. How do you see this, and what are your defence mechanisms against it, and why should people be investing in flower?
Yeah, I think it's a really good question, and it's certainly something that we keep a pretty a strong focus on. Is there is some risk of flower becoming a commodity, over time. I think in the Australian context at the moment, we still, we have a lot of production going on, but we don't have any of it happening necessarily at scale and then benefiting from the economies of scale of producing raw material at high volume and at high efficiency. So I think certainly our view at the moment is we need to get to that point, which is having that that economy of scale happening to produce a price competitive raw material. Raw material production as in Australia is still going to be highly valuable, as we have all the companies and all the advancement of the different producers, different manufacturers. And as Richard alluded to, as we start to focus more on, niche products and indications, is that the production of raw material, high quality raw material, is still going to be required and very valuable, and access to it at a local level is still going to be really important. The defence mechanism is really the next phase, which is, the result of, some of the R&D activity that's going on across the industry, and we're certainly into it as well, which is, we're not setting this up long term for a commodity cannabis play. There are, there's, as we learn more about the plant, we know we can increase the yields, we can increase the concentration, we can certainly isolate particular cannabinoids that we think are going to be of high value. And our R&D activity, our accelerated breeding program particularly, is looking at those things. So you do create cannabis that isn't commoditized, or raw material that isn't commoditized, that has some value and that matches the clinical needs. I think, a lot of the work that Richard and the Zelira team are doing, which is, focusing on particular indications. And as we learn more about, the mix of cannabinoids and what has better therapeutic effect and how we deliver it, that's going to feed back into the genetics program. So I think that's really going to be the focus, particularly for us here in Australia, is creating those strains which will have, some higher value and some protection just from pure commoditization.
Yeah, thank you. And Cann Group are very much focused on the European market. Developments in North America are still appearing to be heating up. Are you looking to maybe, show a little bit more, I guess, diversification and tend to lead into the US with some of your final products, or maintain the focus on Europe?
Look, I think we keep the changing. Certainly, having one set of regulations across the whole country would be really helpful. And I think Richard made a good point, which is that I think we've got some work to do getting that through the Senate. But I think it's on the horizon in the US. Is that there's certainly enough will and enough certainly tax revenue happening at a state level that I think federally they'll get to a point where they can move over probably some of the more ethical or conservative boundaries that are holding it back at the moment. So we certainly do have, we've got a US strategy. We think that there is going to be opportunity there for us, particularly in some of the things, a lot of our focus at the moment is also on product development. So creating some products which we think, in a different regulatory environment will have utility and, and certainly commercial potential in the US. So, I think it's getting over this, there's some of this, federal versus state legislation stuff, and the freedom to operate is the bit that I think will really unlock that opportunity.
And certainly, especially today with a lot of volume going through cannabis ASX listed stocks, we've seen a lot of momentum on the back of these legislation changes. If we do, and I know Richard's touched on it, Kingsley's touched on it, for whatever reason, this gets stuck in the House of Reps, doesn't get through the Senate, are we going to see, that momentum lost and go back into something else, or are we going to continue? How do you see 2021 playing out?
Look, my view is the US reps is the lowest order of the three things that have probably happened in the last couple of weeks. I think the UN convention down scheduling, and then also the ruling around CBD in Europe, particularly, I think is being really, that they're probably the two things I think that are driving the sort of the run on certainly our stocks and probably global stocks at the moment. So those things, I think we now need to capitalize on that. Certainly locally, the down scheduling that the TGA are working their way through now of CBD to S3 and putting it over the counter, that in itself, I think opens up other opportunities in other markets where you'll actually have a product that'll have been through a registration process. It'll have a registration dossier, it'll be an over-the-counter product. The next piece will probably need to be, assurances around, zero detectable THC in those formulations, which again is all possible. But I think that in itself, creates a lot of opportunity, along with, the down scheduling, I think, by the UN allows a lot of countries that have been grappling with, that schedule in terms of moving forward with a medicinal program or a pilot program that'll help get them moving on that as well. So I think, that we should, the House of Reps one, I think, is probably the, as I say, lower order one of the other two, in my view anyway, at the moment.
And regarding the FMCG market, do you think Cann may head into that direction, or do you think it's strictly medicinal for now? And how big do you think that market could potentially get?
Look, our focus, we think there's a lot of opportunity on the medicinal side. I think we struggle, now that we're getting some momentum, we struggle to keep up with some of the demand, and particularly out of our existing facilities, and why we're building the Mildura facility. Our focus is on medical at the moment. We think that there's terrific opportunity in the market at the product development and the differentiated products, moving ourselves away from, flour and tinctures, or, to more sophisticated products out of an extract. And, we've got a lot of work, there's a number of companies doing it. We're one of them, doing a lot of work on those sorts of product forms. That gives you a differentiated ideally patent protected position to move forward to, as Richard said, we get into registering products, and then you are starting to, you start to head down it's not without significant investment, but also the reward at the end, as GW has shown us, is that registered products that can get reimbursed in major markets around the world is, where you stop. We all operate in the shadows in a lot of countries at the moment under special access or magistral schemes, and being able to have a registered product that is, that you are applying for reimbursement across the world, is that where, as to Kingsley's point about the potential of the revenues in the market, that's, a lot of that's going to come from having those products that are registered and reimbursed.
Yeah, certainly. I think GW, correct me if I'm wrong, I think they did about 90 million in a quarter last year, which is incredible. Comparing that to a Canopy growth, it does that in maybe per annum, if not more. Yeah. So no, that's a good insight, Shane. Thank you for your time. And just for all that's still listening, we can do some Q&A at the end if there's any questions. So please feel free to stick around. Our next guest to closing down is Joel Sherlock, co-founder and chairman of Vitalis Extraction. I've got a lot of questions for this guy. I like Extraction. I think they've had a really good run. But Joel's a serial entrepreneur. He's a business leader. He's led a number of startups and corporate exits, but has been a leader in the manufacturing or the foundation of Vitalis, who are a leading global industrial scale builder of extraction systems. Supercritical CO2 is what they specialise in. We won't dive into what's better, ethanol, hydrocarbon, butane, whatever's next. But I think the point is, the extraction guys have done very well in kind of the phases of 1.0 and 2.0. So Joel, thanks for coming on. How did you get into the extraction business? And obviously you've won some awards on the back of Vitalis. So run me through all this.
Yeah, no, thank you for having me on, Ryan. This story is an amusing one. I mean, I stumbled into it really, and my background's in finance, real estate. We had a number of private equity funds in the property space. So very, very early on in the cannabis markets in Canada, I had somebody approach me and said, $10 a square foot for that building, I'll give you 12. And I thought, that's terrible negotiating. Why? And they informed me they had a license from the government to grow cannabis, and this was in the 2011-12 area, so right in the very, very early days of the medical program in Canada. So I mean, I laughed and walked them out of my office, and then sometime later got an education, talked to our chief of police, and brought them on as a tenant. So that was really my first experience there. And then we invested in a plant food company, we invested in a lighting company, and then that sort of birthed Deventi, which was one of the first private equity funds dedicated to the legal cannabis market. But we were always, I don't know how to cultivate. We were always in sort of the ancillary products, lighting, fertilizers, started financing a lot of extraction machines. And then, we really believed, as Shane and Richard were talking about, as that broad spectrum and a lot of those products as being the future, right? There are a lot of important pieces of that value chain, but, I have zero green thumbs. So really, it made the agreement to stay out of that side of the market for me, myself. So we were a financier of this equipment first. And then as the facilities had different needs, we went to standardize to one platform and really needed colder processing for some products that we were making. We needed faster pumps and bigger volumes. And then of course, me being the finance guy, I wanted a deal and really couldn't find it in the market. So went to some oil and gas engineers, of which in Canada we have plenty. And when we went to them and said, could you make me a few of these machines? They laughed and said, what kind of pressure? I said 4,000 or 5,000 PSI, and they said, that's cute. And and it was born.
Right. It's a very important point you brought up is the extractors currently are the future. How do you feel about some of the tier one pharmaceutical companies who have their own processes, very GMP compliant, to stay consistent with the products and the end products that they are producing? For example, down here in Australia, we supply 30% of the world's opioids.
Absolutely.
Tas Alkaloids are a leading manufacturer of morphine and hydrocodone. It's something that Zelira also use to produce their products. Would you consider maybe them a step ahead of the current extraction players in Canada, and can they and should they be aiming to get there, or are they kind of focusing on recreational for now?
It's a great question, right? I mean, when you look at, there's two very, very important differences, right? When we look at regulatory environments in an EU GMP compliant facility, and in a state licensed facility making recreational products, I mean, they couldn't be further from each other from a standpoint of documentation, traceability, trackability. Just basically everything they're collecting in that facility is extremely different. So, when you look at some of the cannabis facilities that are EU GMP certified, we've talked a lot about GW, to Avanti, to some of the other groups that have their licenses, right? Medifarm in Australia. Those are very, very, they're far more similar. But I think when we actually get to the extraction of the products, right? When we look at single volatile isolations, so trying to get into just, opioids, or I mean, you go into like lavender or whatever it may be, right? Aspirin from birchwood, or it doesn't matter, but those single volatiles are much easier to isolate and get consistent than, Richard was talking about broad spectrum oils, right? When we look at isolating THC or isolating CBD, really that's a lot easier than getting those broad spectrum oils out, which, when Shane's variants in the grows, if they're very good, like a Bedrocan or someone, right, we're going to be very consistent. So the variation when you extract or concentrate it is going to still be there. So when we look at all of the cannabinoids and all of the terpenoids, which do work very well together, and when you look at a broad spectrum oil, you're trying to isolate all of those pieces, not just get to one item. So the extractions are very different, and then the facilities and documentation are very, very different as well.
Okay, so it's an each to their own situation, which I tend to agree on. For the investors who are currently listing at the moment, extractors were a great play in 2019, 2020. We have seen some reductions in market caps from some of these guys. What would your advice be to some of these investors out there to continue to get back into this extraction sector, subsector, or look to move into another ancillary service of some sort?
I guess it would be, for me, I think you need to look at the business model and the longevity around it, right? When you look at some of the early numbers coming out of, the toll processors or contract manufacturers, right? If you're a contract manufacturer in any market and you've got 60 or 80% margins, you can expect that competition is going to come. So there was some margin compression, and I think there will be further margin compression. If we look at the CBD space in the US, there's been extreme margin compression, because CBD isolates, right? You can put any type of product in and isolate just out the CBD, get it to a 99.9% purity, and then sell it. Now, I think, a lot of those businesses, as the regulatory environments change, we start to get into CRF 111 and 211, which would be food and pharma specs. I think we'll see a lot of the businesses who can't leap that hurdle, they're going to be out, and then pricing will normalize again. But, as we talk about, the extraction world is a big CapEx spend. And I think the only guarantee you have is going to be change in the type of biomass coming in, type of products you need to make, and then just change of the general economics.
And Vitalis, have they got any moves to look out for in 2021 as a business model?
Yeah, absolutely. You know what I mean? If for us, we're the largest manufacturer of this kind of equipment in the globe. So, we have an office in Australia, we have South America, Canada, US, and then throughout Europe, we've got some service centers. So, our best innovation sources are the customers. We don't extract, we build the equipment that powers the majority of the industry. So for us, as Richard does great research, and Shane grows an incredible flower, and Kingsley invests in a lot of deals. I mean, those are our sources of innovation. So ultimately for us, automation, throughput, we're already a leader in documentation and GMP and reliability and replicability. But I'm sure there's some interesting post-processing things you'll see from Vitalis. So extraction step is where we really, really dominate. but the next step of isolation and purification is what you can expect from us in 21.
And finally, my last question would be really around the patent side of things. Next Leaf Solutions is an interesting business. I think they're really focused on gathering an IP portfolio, I guess.
Yep.
Do you have a view on that? Does it make sense as a company to base your sole business model around patents?
I know Paul and the team well. They've got some great extraction technology. I think the space and the consumer demand is evolving so quickly that ultimately they're going to have to keep those patents very fresh. And of course, as we all know, right, that patent is only worth as much as you're willing to spend to protect it. So that's potentially another risk. But I think ultimately the knowledge and research that we're going to see, and this is really where we get excited, right? As we understand more about the plant and, what is THC in its acid format doing? What is CBG, or how do we use CBN, or, all of these research experts who are unlocking more value out of this plant, that really evolves what you need to make as an extractor. So the patent portfolio, I think if you're doing the research and patenting, the isolation of that volatile, that could be very, very interesting. But looking at, I think what the extractors will be making in a year from now is just being thought of today.
It's a great summary. Joel, thank you for your time.
Thank you.
And just concluding that, that's it from us. I'm just going through the Q&A here to see if we have any questions. We are happy to take any questions from listeners, so just type them in using the panel at the bottom of the screen. We've got one here from Lachlan Grout. How will your facilities compete with extracts derived from broadacre, high CBD, low THC cannabis? Genetic hybridization is allowing broadacre flower production possible. We have already seen this situation in the majority of legal states in the US. I'm going to say, Shane, that's directed straight to you, mate.
I figured that was what you were going to say. Yeah, it's a good question. I think, and then that was to my second point, is that as we understand more about what cannabinoids or parts of the plant we want to isolate, we know there's a need for the acid form of THC for a number of clinical applications. So I think from our perspective is that that the protection for us, or the advancement on the cultivation side, will come around how we the genetics work we do, and then creating high value genetics that maybe are not not able to be grown at scale in broadacre facilities, whereas in a controlled environment, in an indoor controlled environment, we've got more chance of doing that. So it is definitely something that we need to keep an eye on, because broadacre can certainly bring the cost down. And from our perspective, it may be something that we do down the track. At the moment, we're focused on getting the first phase of our glasshouse up and running. But the future in this industry is pretty evolving, and I think that we've seen all manner of pivots and changes and adaptations in North America that we may, all of us may look at in time once we execute on this first phase.
Thank you. Another question's come in. Kingsley, this one's for you. Can you see yourself potentially investing into the recreational market pending any UK legislation changes, or is that strictly not allowable for now in your mandate?
Yeah, I mean, obviously that's a question towards the proceeds of crime issue that we face here. So the reality is, a lot of the excitement and the opportunity is in the recreational markets, but actually what we're seeing, particularly around Europe and people trying to get licenses and grow, are moving into facilities, trying to get their position set for the medical market, but with an eye to 5 or 7 years down the road to be able to convert those into the recreational focused facilities when Europe comes on. But I think, again, Europe and the US and North America are very, very different markets. Obviously, Europe is very focused on the medical sides. I think there are some trials underway in Holland right now to sort of take those coffee shops and try and kick them into a little bit more shape and put a, thought through well-grown product into that. And I think Luxembourg is talking about some sort of recreational programs. The German government just turned down that option. but I don't see anything in Europe, in the next few years for our fund, which is a 3-year investment period of the fund. So certainly nothing in Europe in the next 3 years that will be investable in. There are essentially opportunities in the US, but we don't see the proceeds of crime issue changing anytime soon. The legal position of medical in the US, in the UK, sort of came out in sort of November 2018, and we're still struggling to try and create any sort of industry. I think, as someone said, we're years behind Australia. So things are happening real slow at the government level. So I don't see that changing anytime soon. So that would leave us prohibited from investing in rec. But then on the rec side, I don't see anything certainly in Europe coming anytime soon either, certainly through our 3-year investment period.
Thank you. One more to Shane and Richard. Do you think the delay by the TGA regarding the announcement of CBD could be related to the UN's recent decision and their recommendation on cannabis? And do you think the 60 milligram dosage would be enough to register a product with an indication? Not a bad one. Richard, do you want to start off with that one, or?
The first part of the question, I couldn't answer that one. I think I might leave that one to Shane, or maybe float off to the ether. But I think probably the more relevant one there is the EU Court of Justice decision, I think, which really gives some guidance to the TGA about whether it should be considered a narcotic, because in a sense, that's what the TGA has done. It's taken a halfway position in what it's trying to do with CBD, which I think has made things incredibly difficult. Do I think the 60 mg dose is enough to register an indication? I think people are going to struggle with that. So I think this is an interim step. There'll be a lot of pressure put on them, and ultimately would lead to, I think, full OTC availability up to a threshold seems to make more sense. And that's more in line with what we're seeing in the EU. So I think they'll come around eventually.
Yeah, no, I agree. I think that the dosage question and some of the feedback the TGA have taken from industry has probably made them take a bit of a rethink about the dosage guidelines. I think, and as Richard said, the 60 milligrams is probably too low for a number of indications. So, I think that the TGA have been quite consultative, and they've been quite open to taking feedback from clinicians and also from the industry around the dosing guidelines. And I don't think it hurts. There was a feeling that we were rushing through some legislation, to deal with, creating a more accessible form of cannabis for a number of patients. But sometimes in the rush, you end up with something that's not really workable. So I think taking a little bit more time to get something that's a bit more workable from a dosing perspective, and then, that's commensurate with being an S3 product, I think that's a much better position for the TGA to take. So I think a bit of patience here doesn't hurt us.
Yeah, I agree. And last one, Joel. Can Vitalis see themselves merging to the psychedelic space, or potentially down psilocybin or DMT, and do they have the capabilities and skill sets to extract these particular substances or compounds?
So cannabis and hemp are very big markets for us. We're also in food, flavorings, some industrial applications. We have a number of clients who are exploring that right now. We have a number of research projects in the space right now for psilocin, psilocybin, and more. The polarity does almost need both solvents, so CO2 and ethanol. But I think the entire psychedelic space and the medical potential that's there is also extremely interesting. I don't think the volumes will be, well, I know for a fact the volumes will be nowhere near the cannabis markets, but definitely something we're keeping a very close eye on for sure.
Right. Okay, and that concludes to the discussion. Thank you everyone for listening. Any questions, please feel free to get in touch either to NWR Communications or myself at Pack Partners or Kingsley. Any guys, please feel free to reach out. And I've got a replay of this forum to send out tomorrow. So once again, thank you very much. Enjoy your evening. Chat soon.
Thanks, Ryan.
Thanks, guys.
Thank you.
Good afternoon, good morning.